Hello, everyone, and welcome to another webinar with ACY Securities. For those of you who might be new tonight and attending for the first time, my name is Alistair Schultz, and I'm the Chief Market Analyst at ACY Securities. My background sort of ranges from a variety of different financial institutions over the years, with a career spanning about 15 years. I'm a published author, and I've also been working on trade floors across the board, including in New York, Singapore, London, and a variety of other places. So I do have a fairly broad range of experience on both fundamental and technical analysis. And tonight we are starting to put a bit more of planning into these webinars than we have in the past. So I'm going to be trying to get a bit of feedback from you guys at any point in time. And of course, don't be afraid to ask any questions. Now, if you are wondering how you might ask a question, the best way to do it is actually through the Zoom webinar chat function, which I'm hoping you can all see the existing one that I've got on my screen right now. I've got in front of the ACY Securities logo. If not, as a part of Zoom, if you go up the top, you'll be able to find a chat function. There's a question and answer one, and there's also a chat one, which is usually in the More tab. If you go into More, it's the top one at the top. Alternatively, you can hit the Alt button plus H on your keyboard, and you will be able to find me to send a message. Now, why that's important is because I like to know what you guys want to hear from, or if you have a particular trade in mind, a chart in mind, or you just simply want to get a little bit more information about a particular market, then please feel free, shoot me that message and let me know what it is that you want to see. The general structure of tonight is going to go along the lines of me giving a bit of a recap and an update about where we're at in this week's markets, and then we're going to move into some charts. And my focus at the moment is going to be looking a little bit at the pound dollar, because I noticed something that might be setting up. And I've also been looking at a variety of other currencies. But of course, if you've got one in mind that you think has got something coming, we always love to look for an opportunity, because I'm certainly one of those types. It doesn't matter what market or trade it might be, I will seek out the opportunity and try and make some money off it. So looking at what we have to get out of the way first, the first thing is we have a risk disclosure warning. And this statement here effectively says that before you decide to trade foreign exchange, stocks, futures, options, commodities, or even invest in property, you need to really think about your investment objectives, i.e. what you're going to do with the cash, your risk tolerance levels, and how you are adjusting to them, and of course, your level of trading experience. Now, if you do have any questions, or if any of those things you're not sure on, then please feel free to reach out to me. I'll provide my email address at the end that you can get in contact with me. You're also most welcome to hit me up with a message on any of my social media channels as well, which are often all over the place. But soon we'll have a little bit more structure to what we're doing in these evening webinars, and you'll be able to get all the info that you need immediately. For the interim, feel free to use my email at the end. Now, what I would like to do to get us started off with is obviously start with a bit of a recap. I'm also going to sort of have a look at the economic calendar for FX, just to get a bit of a gauge on what we're going to be looking at tonight. I'm going to put a chart up for now, and also have a look at the economic calendar. We will flick back and forth between a few different things throughout the evening. Now, to get started, here's our economic calendar for today, Thursday, the 14th of January, 2021. And as you can see, we've had quite a few different things already come out. Most of them have been low impact events, signifying by the yellow. For those of you who might not have seen this type of calendar before, this is one of the ones that I use. I actually use a lot of different calendars depending on the market that I'm using. If I'm in FX, then I tend to stick with Forex Factory. If I'm on metals, Forex Factory have another one, which is Metals Daily or something along those sort of lines. But there are quite a few of them. And if I'm dealing with stocks and options or anything else that might be on a company sort of scale, I tend to look at their earnings reports, calendars, and where they might be going. Otherwise, the rest of your information tends to be a little bit more fundamental, coming from company releases instead. So it does vary bit to bit depending on where you are actually looking. Today, this morning, I think some of the most important things that you could probably tick off, because even though they're low impact events, they might have a significant effect, perhaps not on immediate price, but sometimes it's just about the general feeling of what's actually going on in the market, and that's important. So the first ones that I've been paying attention to are crude oil inventories, the FOMC member from Brainard. He's actually chairman of, I think, the St. Louis Fed. You've also got the 30-year bond auction and the beige book. Now, with the rest of these, you've also got Fed Clarita. She's usually quite a hawkish member. They're the big ones that we've looked at today. The rest of them, not so much. I mean, depends on the given day for those. And that's why you tend to leave them as low impact events. It depends on what's actually happening in the economy at the current time. Naturally, if there was something that was affecting trade balances in China, then there would be a much higher focus on that. So when we look at the US situation and when we think about these calendars on a regular basis, we need to put a little bit of guesswork in as one part, but we also need to have a little bit of an understanding about what's going on around the globe. So to get it sort of over the message and get the sort of starting bit going on, really what's been going on in the US has been dealing with yields on treasury notes and bonds. And they highly affect what happens in the value of a dollar. Because if you think of it, it's debt to the government. So instead of a bank loan happening where you would seek out a loan and then they would lend money to you, it's actually you being the lender, you're being the bank, and you're loaning the money to the government. So there's been a couple of auction bonds that have gone on. We've had 10-year and 30-year. The spread between your 2 and 10 years have widened a little bit further. We're seeing the US dollar increase in value a little bit at the same time. And that's all important because at the moment, the Fed has a massive asset purchase program. They're purchasing about $120 billion worth of bonds every month. So what we're seeing now is an increased demand for bonds. And what that might mean as a way to control the yield, and that yield is very important because the higher the bond yield, generally you'll start seeing higher levels of inflation. So we try and keep those inflation levels down at the moment because the economy can't quite handle it. And the way that they do that is they reduce the amount of bond purchases they have. So there's been a lot of speculation and a lot of talk about the Fed and whether they might taper in and rope in some of that pandemic stimulus money that they've been giving out on the monetary policy side of things. So that's why we're seeing a little bit more attention on what the Fed's doing. Naturally, over the last year, there's been a lot of attention on the Fed anyway because of all the stimulus going on from monetary and on government from fiscal. So all of those things are designed to help support your general economy overall. Now, what we've heard from Brainard overnight, Clarita's speech wasn't all that exciting, but Brainard's speech, he was certainly talking about the idea of tapering in some of the stimulus money that's going on when it comes to asset purchases. And he actually pushed it back. He said, no, look, we're not going to be doing any of that. We're not tapering. It's not the right time. And you can pretty much take that out of mind. And so we've actually ended up resulting from that comment and from people feeling a little bit more optimistic about it. You know, earlier in the week, it's been a bit quiet, bit mixed sessions, pretty flat, and sometimes a little bit negative. We saw 2 days of runs down as well from Monday and Tuesday. So people have been sort of a little bit hesitant to go hard on anything. And that's purely because they've been a little bit unsettled by the idea of, well, what if the Fed does actually change this? And so when the Fed starts reducing their stimulus, you can anticipate your bond yields getting a little bit affected, your dollar value starting to be affected as well, and you will likely see your stock prices come down a little bit. So you'll get the counter opposite effect to everything that's sort of gone on when they've been pumping money into the economy. All your monetary stimulus pushed US stocks up and all those sort of things, but you saw your yield values drop and your inflation start to drop down a fair bit as well. So you're going to see a shift when they do start doing that. People will start moving their money into different areas and avenues, much like we've already seen in other areas. But we'll discuss that perhaps at another time, or if someone has a question about it, I'm quite happy to go back into it. So whilst that's all been happening, we've also heard from the Beige Book, and there are 3 or 4 books that come out each year from the Fed. And these Beige Books are just kind of like, it's not a super important thing, but sometimes they do offer a little bit of insight. In this instance, it showed that the fourth quarter was showing a little bit of a recovery for the US economy, and that they were getting to a certain degree of health that was going to be good. But then they also were showing that the employment situation was kind of still slowing down, and that wasn't going to be a good scenario for them. The other one that happened, and this might be interesting and for some of you, is that Donald Trump actually ended up getting impeached today. Sure, Sam, I'll have a look at Euro Aussie at some stage tonight. We'll get through this bit, get through the pound dollar, and we can have a look at what's going on there as well. So now when we think about what's going on with the impeachment of Trump, it's not a big event. To some degree, it's more media-based interest that we're really seeing. There's, if we look at what's going on the S&P 500, I'm just going to clear off our chart and have a bit of a gander here so that we can get a closer look. Stocks are still going up or sitting slightly sideways. Nothing here has been a huge impact, and the reason being is that his time is kind of coming to an end anyway. But there are some implications about what they're doing. It's a little bit of a tactful decision by the by the Democrats to make sure or ensure that their reign can continue beyond the first one term. Because in this instance, if you do get impeached, it means you literally can't serve in 2024. And that's the 25th Amendment. The other one is the 14th Amendment. So that does affect a little bit. And the reason being is when we think about Biden's policies, which were also released today, he's announcing a bit of, well, it's not entirely, but he is announcing a bit of a plan supposedly later tonight about fiscal stimulus. So that means stimulus coming from the government as opposed to coming from their Federal Reserve. And so what's happening in this instance is there's a lot of a big push towards it going to about a near or close to, or if not actually $2 trillion. So there's pretty big figures going in towards that. And he's got a very big interest in green energy and green businesses, anything that's going to be environmentally friendly or carbon neutral and all those sort of things. So you've seen a bit of a push up on EVs. And so this has actually resulted in companies like Tesla growing a little bit more. We've also seen a number of new companies who may not have actually even developed a car, but are what you would consider to be an acquisition company, getting picked up by other companies, and they're trying to push them into being public entity. So the big ones are what we call special purpose acquisition companies, SPACs for short, and they've been getting a little bit of steam ahead on some of those. Whilst you can't physically trade them yet, there are a lot of deals and a lot of mergers occurring. One of the ones has come from GM, where they've acquired a few little things here and there along the way anyway, but we're likely to see a lot of those deals starting to kick off again. So that's kind of a general gist of what's been really happening with the US situation. In terms of where we might move from next for that is anyone's real guess on where it can go. There's always plenty of different markets to be looking at, different days of the week. So trying to narrow down your focus, it really is a case of, back in the days when trading was, perhaps 20 or 30 years ago, it was the person who had the fastest access to information who was successful, or the most access to information. Today, it's about the ability to actually filter information. So what we're going to try and do tonight is do a little bit of filtering and see if we can find something that is going to be somewhat useful to us, and in the interim, make us a little bit of money. And if not, at least set up our minds for the next opportunity that might come across us. So let's get into it a little bit and start looking at some things outside of what's gone on in this sort of world. There's also some moves from IBM, which I don't mind. I'm sorry, not IBM. Intel. Sorry, I got my wires crossed on that one. So Intel is a company, you likely all heard of them. They're what you call a chip manufacturer. I do like to try and switch between FX and or derivatives and obviously your stocks as well, because I know there's a bit of a mix on who likes what they're looking at. So on Intel today, they've actually had their CEO get ousted. And that's not a bad sort of thing. The guy that they're replacing him with does look like a little bit like Mario Draghi, which I kind of think is funny, but it's really just a general thing. And so the CEO that they had was this guy called Bob Swan. And Bob Swan has been pulled out. He's the shortest running CEO. This guy here, shortest running CEO of Intel. Previous one was about 5 years. And now the new guy is this bloke here, which is Pat Glemsby. He is the current chief of another company called I was talking about them earlier today, VMware. So they're a software company who's moving to the hardware side. And we've already seen VMware drop about 8% in its stock price, or even closer to 9%, whilst we've seen Intel go up. The reason I'm mentioning this is because of just the change in leadership can actually create big change in the value of a company. Obviously, people are seeing that this guy here, Pat, and replacing Swan is good for the Intel side, but negative for VMware. So that's a little bit of the fundamental side. In the future, what do I think about Intel? Really, realistically, over the last 2 years, they've had a little bit of trouble moving anywhere and getting ahead again, because once upon a time, I'm sure many of you would remember, they were kind of like the top dog in the chipset manufacturing sort of arena. Now they've been overtaken by NVIDIA and a Taiwanese company, a number of high grade sort of tier one chipset manufacturers kind of taken over them. And, once upon a time, you would have looked at them as being nothing more than distant rivals. So there's obviously been a few problems that have gone on. The biggest one has been that obviously loss of market share, who they're actually selling their products to. They lost a contract with Apple earlier last year, I believe. And they've also had problems with production. Naturally, a lot of the world has had issues with production, manufacturing, and distribution in the last year due to what's happened with coronavirus. Those issues still remain. But Intel are assuring us that their figures that they estimated for October on the next earnings reports will likely be positive. When you look at companies like this, they are very blue chip. So, when it comes to the moves that actually happen over a longer game, they generally will improve and gain, but not always. This year in general, I think, is going to be an interesting setup for the entire global system. We're probably going to see, economies and figures on and earnings results have really good years, but stock prices may not have quite as good. It's still going to be good, but not absolutely fantastic. There are a number of challenges to come across, a number of risks that are sitting right in our face that we are all kind of ignoring a little bit at the moment. All right, so enough about Intel. Let's jump into our first sort of chart. I did promise I would have a look at the pound dollar to get kicked off. So here I don't want to open a trade. There we go. So here is the pound dollar chart. Now, I don't know what many of you use as your time frames. I do try and cover a few of them for anyone who hasn't been here. So usually what I'll do is I'll start with the monthly go, the daily go, the 4 hour, 1 hour, 30. I usually skip the 30. Sorry, I skip the 30 and the weekly most of the time. Just depends on the market. If it's a stock, I'll tend to look at the weekly. If it's FX, I kind of skip it because you don't get much more information between two. The same between an hour and a 15. I'd rather go to the quarter increment than the bigger one. So now looking at it from a monthly chart, let's whack up some lines and see if we can find some areas of support and resistance that might give us some value for tonight. Now, just to get it off the bat, I am going to draw the longer term running stuff that I've been looking at. Now, you can probably go with the trend line from the top up here like that. That's not a bad one to use, but bear in mind it is an overarching long-term downtrend. And we're really focusing on this area here, which is really only going to be in this area here because this is a monthly chart. So, some of the stuff that's happening from a long time ago will still impact price, but it may not have the same relevance today as it once did because a lot of things change. So this one here is obviously an important placement because we've seen it touch, we've seen it act as support before, and now we've seen it act before as resistance. So this is probably an area of interest that we're going to want to keep on the longer term side of things. Now, regardless of the chart, of the market, or anything that you were looking at, it's not a bad idea to review the monthly chart every now and again. If you're trading every day, maybe leave it for every couple of weeks that you have a look at your monthlies and the dailies, particularly if you're on the shorter time frames, because you might find that on the shorter time frame, you're trading in, you've got a bias in your head. Oh, we're trading in an uptrend. But when you look at the longer time frame, you know the difference. You kind of want, that saying trend with the friend is, or the trend is your friend is kind of relevant to it to a certain degree. And so, you do want to try and always be on the right side if you can. So now what we're sort of seeing now, we've also got a little bit of resistance. We've got a support on the bottom here. So we've kind of got this range between sort of here and here that we're going to be focusing on. And the way for those who might be new, the way I think about what happens with trend lines is I don't think of them as a static line. So, I don't think if price was to, I'm just going to change the color here while I'm doing this interaction. I don't think about trend lines as being a fixed or static piece. If price was to move up like so and then touch back, this would be the static bounce that we would consider. We see a trend line, we think, yep, that's the point it's going to bounce at. I think of them more as a zone of resistance. So instead of it being a static line, yes, in some instances it might work, but I tend to think of them as being a little bit like a box. I might just adjust that so that it's fits in with our description a little bit better. So if this is where your initial trend line would be in the middle, you've got your bounce off here. I think of this zone, the area around it, as being something that's going to cause price to react. And if that is an occurrence, then that box might be a little bit bigger, might be a little bit smaller, depends on the price action around it, before it, and how it's going to affect. But what I tend to do is, instead of focusing on just this line and there must be, if I was to see a candlestick pattern happen just before or right on the edge of this box, I would take the trade. I wouldn't wait until I saw, it bounce onto this line. It has to touch this line and come down. It might even come a little bit above. I think of it as a zone or a placement, as opposed to a fixed place in time or wherever it may be. So either way, we've now got a few trend lines that are going to give us a little bit of activity to look for what we might be finding next. If you wanted, we could even go with one up like that at the moment, but we might leave that for a shorter term chart. Now, this is our daily chart. You can see where we've had our collapse sort of last year at the beginning of the pandemic down here. We've been in a constant slug in an uptrend, and a large portion of this is actually a weakening US dollar. Now, if we were to have a look at what's going on in the US dollar, which we've already spoken about this evening, there are a few little variations in perhaps a little bit of a description that you might not sort of see. So I'm just going to bring up a dollar index just to give you an idea of what happens. Now, some of you may already know, some of you may not. When we think about what's going on, though, with a dollar index chart, which for some reason on this MT4 version, I don't have access to it right this very second. So I am just going to bring up something that everyone can sort of look at if they ever wanted to. You'll probably find it on yours. It might be called the USD or something along those sort of lines. Now, what we're looking at here, I'm just going to bring it up a little bit closer, 3 and maybe, yeah, there we go. That'll do. Okay, so this chart that's gone too big, but we'll work with it. So what you can see here is, where the value of the US dollar as a general index is. So what happens is you get all the pairs that have the dollar involved in them, and you sort of average them out, and you end up with this line. And in this instance, this is the lowest the dollar has been in a very, very, very long time. And the reason for this is behind what's happening with the stimulus side of things. We've seen huge amounts of money being pumped into the economy to try and enjoy it. They're making new money. So what happens there? If you were to have, one stock, and I'm going to use stocks as an example because it probably is. Let's say you have 10 stocks in one company, and each of those stocks is worth $1. And then you could decide that, so that would make the entire market cap of that company $10. 10 stocks, all $1 each, $10 in total, company's worth $10. And then let's say you decided, well, we need a little bit more cash in, so let's just make an offering and add another 10 stocks. And so each person thinks, oh, I'm getting an extra stock for free, those initial 10. And they do, they get 2 stocks. But what's the reality of the situation is now there's 20 stocks in the company is still worth $10, and each stock is now only worth 50 cents. So in the same sort of attitude, if you were to think of, a country as the largest business that is within that economy, which it is, then you can think of the value of the currency as kind of like the stock. And when you purchase into that currency, it's kind of like purchasing in, or you believe that economy has good offerings and is going to make good returns. So that's one way of thinking about it. And so when we've seen the US dollar coming down in value, even though we've had the Brexit scenario going on, and there's obviously a huge coronavirus problem in the UK, and even now we've got trucks getting stopped at borders because there's a bit of chaos about where we might be sending the money next, this is where we end up. We end up with the US dollar still declining in value just because of the huge sums of money that they're pumping in. And yeah, the UK's done some, but not anywhere near to the same component. So we have had this consistent running uptrend for quite some time. We can put a line across the bottom of that there, like so. That's not a bad one, but I'm kind of more interested in the immediate one, because when you find price comes down and then it shifts, you tend to find that price will continue, resume the trend. So if you think of it a little bit like that, that's our first one. I'm going to copy this trend line across. It might not fit perfectly, but it's so close. It's not funny. So you can see here we've had, both of these lines. All I've done is copy them. They're an identical line, shape, length, everything. And to give you a little bit more foresight on that, there they are next to each other. There's no difference between them, only the placement on where I put them on the chart. So in this instance, we've had price run up. Our trend has then failed, but then it's restarted the exact same trend, just a little bit lower. So we're in a bit of a trending market, and we can even double this up and kind of go like that. And then we've got sort of a top side to work with. And when we move them into that sort of position, we decide to call them a trend channel, because now we have resistance on the top, support on the bottom, and an area or plane that we can actually work with, a range, if you will, that will allow us to actually trade between. So even if we can't find an exact target or exact place we want to go, we can do this sort of thing and actually find somewhere to actually plan out our trades as we're going through. We can use our money management, of course, but we can also have a little bit more of an idea on where we think price is going to go from a visual perspective. And that might include even if you don't have the fundamental side as well. So in this instance, we've got our range. We've basically mimicked our range from what we've seen before on our this trend line here, this black one. And I'm going to make these two different colors just so that they're a little bit more easily identifiable when we move down. So we've got a red one as our support, a blue one as our resistance on the upper and lower side of this channel. Now, dropping us down to a 4-hour chart, we do have a little bit more movement going on. We can probably go, well, we might have a little bit of resistance above this because we've got one high here, another high here. So we've had a test, it's come back up, it's tested again and it's failed, but then so is the other side. So what might we be looking for here? Well, if we switch it back to the daily a little bit and we just zoom it out, we'll see that we've actually got a bit of support and resistance based off right here. And this is a support and resistance sort of pattern playing out. It's not a perfect formation. It's what you would consider to be imperfect, but it does still play out. So what I'm going to do is I'm going to put a line just across there. We're going to change this color and we're going to make this perhaps a green for today. And so we're going to just use the bottom side. We're not going to bother with the top because we've still got this trend line and we've also got this one coming down from our much longer overturn trend. And I don't like having way too many lines or too many things on a chart because it will just get in the way of how we think about things. And so where I place that trend line, you remember on this thing right here, this big, I'll just put a circle around and make it a little bit simpler for you guys to see. This one here, which, yep, there it goes. It does work for me today. Around that, this is all it is. I've just put support resistance there, and we are already seeing an effect over here because this is the last time price got so high, and this was way back in 2017. So what effect might we be having here? We know that we're going to be getting some interesting movement in and around this area. We have more on the side of a resistance-based issue than we do with a support base, because there's obviously a fair bit of, we've seen price go up there, but we've got a fair bit of resistance. We've got first point here, resistance. We've got this line as resistance, and we've got another one at the top, and we can even put one across here where I've got my crosshair going all the way across the screen at that 1.43688 mark. So moving us down to our 4-hour and then down to our 1 hour, just to give you a bit of a view. There we go. We are seeing that green line again. We're still in our channel. Price is in the smack dead center of the channel. And generally that's a place I don't like sort of taking positions, but I will show you why in just a moment. Now that we're on here, we can see we've got on this hourly chart, it's a little bit more clear about the price action that's going on. And the further down we go, the more we can add to our bias. And when we've got sort of a position happening, and we've made sort of these assessments on the longer term chart, we know that there is likely going to be some form of action. I can't slide that chart. There we go. We know that there's likely going to be some form of resistance or support, or a pattern might show up in basically this box around here. We know we're going to see something potentially happen on this trend line that we've got here. And ideally, we want to see price get up to this upper edge to look for our next opportunity. But that doesn't necessarily mean we can't take trades between now and when we go for our main one up the top. Because if you think about it, we're looking at this as a longer term chart. We've got all of price action sitting in between this range. So we're going to use the play of saying we're going to try and sell from the top and then buy from the bottom. And we're just going to bounce our way through until we get a breakout that stays out. Yeah. So when we then go into our shorter time frame on our 1 hour, we know the next play. The next play is we're looking to see if we can get a position that will come back down this way. And then we're going to try and look for one that goes back up this way. But because we're in the middle of this range, it doesn't give us, a perfect place, because the range could, end up here and then just bounce back down again, or it could bounce back up again. We could start looking for some patterns like triangles, double tops, head and shoulder patterns, and potentially find a little bit of help from those as well. Now, the next bit to look at here is that we've actually got a little bit of a trend here that's recently broken. You can see it's broken very, very quickly and easily. So I'm going to change that one, make it another color. We'll go with magenta there, just so we can keep them differentiation easy for me to continue talking about them. And what we're seeing here now is a little bit of a pattern, but it's not particularly one that I want to use. It's not one that I am super confident in. It does make the move. It has already made the move in the last hour, where it's broken this neckline here, which is the first level of resistance. It's busted through it. It's come back up, and it's already kind of done its dash. It's done its distance, and it's not perfect because you do have these long stretched wicks coming down. Ideally, you only want to see one or two, but never a whole stack next to each other like that. So where do we think the next opportunity is going to be? Well, I said earlier today that I'd be looking to try and get into this box and find something that might happen there. And really, until I see this get broken, I'm probably going to sit on my hands for a minute, because we have had this very big run up. It's not uncommon to see a little bit of a retracement happening. Now, what can we do in the interim? The first thing I'd be doing is planning out my next lot of trades, obviously using the box above. But for right this very second, I'm going to be planning a trade now anyway. I'm going to try and look for a position that breaks this pink line. I want it to break and close above it. Once that happens, I'm going to then start looking for an opportunity that might mean that we get a test. So basically, once I get a break of this line, I want to see price bounce off this green one, come down again, and then I want to see it shoot back up again like so. So just to put a bit of a diagram in place for you on this, I'm going to make it black just to indicate that they are candles. Basically, I want to see price move up, sort of continue going up. I want to see it hit up here somewhere. I want to see it then come back down like so. And then I'm going to look for it to bounce off this line. And I want to see price get hung up on that first. And then I want to see it come back up this way. And once it goes up that way, and I get a clear-cut break of this area here, I'm going to take a long position, hold on to that position, and I'm going to try and trail up my stop. So what do I mean by trailing up my stop? Effectively, with my stop loss, I might say for the first instance, where I place them will be a little bit different. So I'm a little bit method like that. So if I'm wondering where I might put it, so pretend this is my stop line. It's very similar sort of shape, color, length, all that sort of thing. So I'd put, maybe perhaps have my initial run of stop loss back here, giving myself, approximately an 80 pip stop. Of course, you can run them tighter. We can move down to smaller time frames and get a little bit more information. This just happens to be one of the time frames I do tend to place trades on. I'm more focused on 1 hour, 4 hour dailies, and occasionally a monthly. If I want to get a little bit crazy with low risk, I will do that and run a very small position size. Now, if we go into the smaller time frames and we're looking for much shorter term stuff, and we'll move into that next to try and cover some of you guys who might be dealing with smaller time frames. Now, what I might do when I talk about that, I would, consider at this point here, I'd go, okay, well, I'm going to watch much more closely at this area and say, okay, we've got our first test, got our second. We could take a small trade here and try and risk it for the biscuit to try and get a full move, or we could wait for a confirmation above this green line and a closed candle and then enter our position with the aim of getting up somewhere around here. Anywhere, if it exits basically the area of this box and you see any form of failure in the candles, then this would be the area that you look to close your position and start looking for an opportunity coming back down on that retracement. Remember, trend is your friend, so you're quite happy to take a little bit more risk on the way up, and on the way down, you only want to be taking a small stop and just seeing how far you can really get. But regardless of that, what I would be doing with this stop would be trailing it up. So once it moves into a profitable position, I might move the stop up to the last high, which would be this last swing low, which would be just underneath here with a little bit of breathing room. Then I might make another swing high further up, and I might move it up to the break-even point plus 1 pip. So that by that point, no matter what happens, even if the price was to turn around and start heading south, and unfortunately it took out my position and ended up closing, it would still end up in a profit, and it would also account for some of the spread or any of the commissions that I may have. From there, each time it moves up, I just keep on moving that stop up. So if we get another swing happening, so we end up with this push down here happens again, and then it decides to take off. Yep, okay, my stop is there now. Then we've got another one that happens just a little bit further up, and it starts to sort of max out where it's at, and we see one more sort of sharp push for the top. Then I would then move my stop up again. I would then drag. Whoops, if I can click on it, there we go. Nope. One of these days it'll click and work. There we go, and it will drag it up to that point there. And then it might turn around and come back the other way and end up taking it out there. But either way, I've ended up, managing to get myself from my initial entry roughly here up to about there for about 70 pip, and just continued to trail that stop up without too much impact on my worries, anxiety, or any concern that you may have about pulling the trigger on a trade. So the psychological factor is also very important and helps you have that. So that's really the gist of where I'm looking there. The next one we're going to move down to is on the 15-minute. We might have to clean it up a little bit, but we can work that out as we go along. 15-minute chart, the immediate move that we're getting right now. I actually wouldn't be too opposed just from candlestick reading. Now, if I was to see this existing candle engulf this green one, what I mean engulf, I mean like this. So if we have a rectangle and this is the candle, we've got our big wick on the top here like so. And then we get another little red-bodied little candle like this. I'm just trying to mimic it out a little bit so it looks kind of the same. So we got that. There's the next one. We have another wick that sort of sits like that, a little bit lower. And then if we were to get another candle that went down like this, and it ended up, or it'd be a little bit lower than that, it'd be about like that, and it engulfed the size of this move and even a little bit further, then I would consider taking a short position, running a stop loss at this point, and aiming for a take profit down around here. We're looking for hitting from the next support point and closing out for a little short scalping sort of position. Obviously, 15-minute isn't quite scalping, but to a longer-term trader like me, it kind of is. The lower the time frame we get, the more obvious it becomes. So this candle here, this red one, this big-bodied one, is actually what you consider to be an engulfing. The rule for an engulfing candle is that the preceding candle has to hit at least 50% of the previous one. Anything more than 50% is engulfing. I prefer them to be a little bit bigger than that, or a full 100% of the candle or more. But I will certainly consider taking a position after the 50% mark, provided I get a nice long-bodied wick that shows a failure on the next candle after that, and then you can roll that down. And whenever you do get, a pattern of 3 or 4 more candles, every time you get another red candle, the most common element after a red candle is another red candle, and vice versa. When it's on the green side, multiple green position candles in a row, you will generally find the very next one will be green. So you can play off on some of those statistics and metrics that do come across anyway. So that's kind of the pound dollar. We're going to have a look now at the euro Aussie. I'll try and do it. I know I've been talking for a long time. I have a habit and I really apologize for this. I have a habit of kind of just continuing to talk because I keep finding things or I see things that I like, and I think that you guys might like, and that is kind of important to consider. So immediately off this 5-minute chart that we've flipped to on the Euro Aussie, there might actually be the possibility of a trade here. I'm just having a good, yep, we certainly do. Now, this is a support and resistance pattern. What you've got, sometimes it's commonly referred to as a double bottom. The rule of that is that you need to have a run down. You have your first point of resistance support get tested. You have your resistance tested, and then you have your next run of support go down and fail to break or reach. It needs to be basically even. It's 2 bottoms consecutively, and then you can call it a little bit of a double bottom. So from here, what's my next move? Some people would consider taking a trade from this point. Me, I'm a little bit more conservative, and I learned that you should be taking your trade from up here. You break your resistance, a confirmation of a candle closing above, and then you go for your position there. So if we would just zoom this out a little bit so we can get a little bit more of an idea of where we're going, this is what we consider to be the neckline. I will make that black. And purely, this is just by chance that we're flicking onto this right this very second. I may even keep an eye on this position over the next little while. You try and make that as straight as you can. It doesn't have to be perfect. You want it to fit in place. You then drag your bar down back here. So this is going to be your stop loss point. This is going to be your entry point. Yes, you probably got about 25 pip in this position. You're going to be looking for price to get past this line and close above. So what I want to see basically before I enter this, so I want to see a candle of some kind, any kind. It could be the very next candle. It could be 1 in 5 candles time. I want to see price close above, and then I'm going to enter for my position. Yeah. So from there, we're going to wait. We're going to wait over the next little while and see if price will come up and close above. If it closes above, we enter. Once we enter, we measure our distance. So we already know what our stop loss is, our take profit. This is a very simple way to do it. It's a 1-to-1 sort of a ratio thing. You go down, you measure 25 pip, you then put another 25 pip on the top. That's your goal. You're looking for 100% price movement at this point here. The 157.026 point. That's where I'm going to be looking for the next bit. So I think that's about 157, is that 25, 29, a little bit high. Come down about there. And still too high. A little bit more, a little bit more, a little bit more. There we go. There's our 25. So this is our take profit. And we're going to be waiting for the opportune moment to enter. Now, these are called reversal patterns because they literally reverse the direction of price. Price has been coming down. A reversal comes back up this way. Now, they don't always play out. You do have usually pretty high success rates if you can identify them correctly. Even I still mix them up, or I don't notice them the right way because I'm doing them too quickly, or I get excited about it. So that's why I tend to prefer longer time frames, because you do get a little bit more time to do it. But naturally, on a 5-minute, if you see something like this and you think it could be worthwhile, then it's not a bad idea to keep an eye out. Now, the other option of this is that it does fail again. So it comes up, fails here, comes back down, and it may decide to test this area, and then it becomes a different pattern altogether. But in reality, you can even, before it's even a pattern, you can probably start to call it a little bit of a triangle or a flag. So you can tell that we're waiting for the breakout to happen. So whilst it's a resistance pattern, at the end of the day, we're waiting for a breakout to occur. So in this instance, I'm waiting for the breakout to happen on this side. And if it doesn't, then my theory is wrong, and we're looking for it to go short instead, perhaps. But at this stage, it is looking quite right. We do have those stop losses in for a reason, those take profits at the right places as well. And so that's the next step to look at. So we've had a look at the 5-minute. I will cover it on a bit of a longer time frame for us to have a look at, and try and talk about it from a fundamental, so we can get a little bit of price action thoughts and fundamental analysis thoughts sort of happening at the same time. I'm not sure why it's copied all the trend lines from the euro dollar chart across, but not to worry. Okay, so looking at it on a monthly chart, where are our obvious signs for interest? First one, we've got one down here, probably a bit too far away from price, to be totally honest. we're a long way from where the current levels of price are. So we're not going to use that one. You don't need them all at the same time. So the first one is really where price is sitting right now. We've got one right there. We have the next slot sitting probably at the next high swing high above that stands out to me, which is probably about here. So you've got this bit of a range of working, and price has been held up there before, which is a good sign. It shows us that, when you're seeing things in the past that might happen again, and they are being potentially useful to us at some stage in the near future. So let's zip us down to a daily chart and have a bit of a look here. You can see price has been continuing on this down streak that we've got going on the daily. It's not a perfect trend line. It's not, but it is steepening. So what I mean by steepening is, the angle that we can draw these lines at is getting steeper and steeper as we go along. The trend is accelerating in a downwards direction. So the further we get along these trend lines, the steeper this curve goes. And that indicates that there is some momentum. There are people adding into their positions, or people adding new positions in they didn't have before. On the daily as well, we can also put a bit of a trend channel there going on. Price has gotten consolidated in this area. And so what we might find now that we've actually got two little areas or two little channels that we can actually use, we might find that price is going to test on this bottom side and repeat this pattern here, this sideways movement again through here. And that's what I am going to be having a look at. And there's a couple of good reasons for having that kind of theory at the moment when we think about things from a fundamental perspective. First reason being, when we look at the euro situation and compared to the Brexit scenario, whilst they're in a better position, much better position, they do still have a big coronavirus problem. We know that the ECB, the European Central Bank, is still considering their options. So there is a little bit of uncertainty about what's coming next from the ECB in terms of, how much stimulus we might get or where their next moves are going to be. We also know that the border locked up with the Brexit situation is a little bit problematic. They're still working. Whilst they've got the deal in place, there are still a lot of things to work out, especially like, how does trade work anymore? And I already know that quite a few different companies that are in the UK have actually put out notices saying, I'm sorry, but we can't actually service you guys in the in the EU anymore, because it's going to be too expensive for us to be doing the paperwork and the transporting and the customs side of things. So we're just going to cease operations. So that's the impact that's really had, and it's overnight. It all happened overnight at the beginning of this year. So we can anticipate that. When it comes to the Australian dollar side of things, we're in an interesting scenario right now. I live in Australia. I'm in Sydney. I'm an Australian. So when it comes to some of the events that come here, I tend not to think about them as often because I see them in the local news. But to some of you guys, we do have some issues going on between China and Australia going on with tariffs and them sort of having a bit of an argument, I suppose, or a disagreement on what they're paying and what they're doing. So that has certainly impacted some of our production qualities. We've seen iron ore prices coming down as well in the last couple of days, with a little bit less demand than what we would have hoped for. And there's a number of different key things that are sort of going on here. We've also, we're sort of coming back out of a coronavirus problem, so that's not so much of an issue. But at the end of the day, that does give us, two markets that are kind of in a stage of uncertainty. Now, on the economic side of things for Australia, we do have good fiscal policy happening right now. The real damage is really coming from from our shipping and our exports, where we're only just being propped up by a few targeted areas. I know today, I think more tariffs were placed on cherries from China. So, and China being one of our largest trading partners, it obviously puts a bit of an impact, and it does put a little bit of worry. But we do have a lot of other areas that are booming, such as our housing markets, which, whatever the opinion may be, that could be bad or it could be good. That's one that I'm waiting to see. But regardless, we've got two sort of economies that are sitting in pretty stable areas right at this moment. And that does get signified by how long it's been sitting in a consolidated phase. We've been dealing from May 2020 with sideways price action, and it's not been until this year that we've actually had a bit of a pushback down. And this could be driven from the value of the euro themselves. The euro tries to very hard to defend the 1.25, like the euro dollar conversion rate. So anytime you see price going up to 1.25, you know that the euro is going to try and do something, and usually it means printing money to devalue the euro because it affects their value of stimulus and imports. And I believe, just off the top of my head, I'm just going to have a quick look at the euro dollar to confirm it. Euro dollar is sitting pretty close to, I think we're at 1.21. So we're not even getting too far away. That concern is already happening. It's been up to 1.23. So as soon as we get to that 1.25 mark, people do start trying to short it. And last time it happened was all through the GFC. We can see these big instances of big moves coming down, big jagged, fast operations down are where we're seeing that happen. And we've already heard from the ECB towards the end of last year that they would consider anything about 1.25, they would have to review monetary policy. So that's your signal for, okay, they're going to defend this perhaps. And so now when we look at it back on our Euro Aussie, dare say that we're seeing a devaluation on the Euro side of things here for the time being. And what I'm going to be looking for, other than where price is sitting right now on the 5-minute, we're already seeing the double bottom. Remember, we saw this shape. Oh, that's not a pretty one. We saw this shape right here, looking for this to come back up this way. So that might be the first signal of our bounce. But quite frankly, we've still got 98 pip, 100 pip. So it's within the scope. If you're looking at a daily chart, 98 pip isn't a lot. Here on a 5-minute chart, it is. But anything within, if this bounce, ends up failing, coming down, then I'd be looking for a bit of a long position down around here to go back up and to stay within, this little range that we've got happening here now. Our 4-hour chart, let's see if we have anything else that gives us a little bit of hope or a little bit of an idea on where price might move to next. We can, on the 4-hour chart, certainly start putting in one of those trend lines that fits in a little bit better. That one there is not too bad for the moment. So, bearing in mind, trend is your friend, downtrend, that 5-minute one is a counter trend trade. I'm okay with a 5-minute counter trend because you can put a short stop loss, usually, aiming for less than 20 pip in profit, and usually setting less than a 20 to 30 pip stop loss anyway. So, it's not a big deal. You just run it with smaller dollars. You could also, if you wanted, probably put trend channel doesn't quite fit. You could put one like that, but it's not perfect. But still, it is kind of there. So we can have that. That's the next sort of segment that we're seeing. Down here is where we're going to be looking. So in the box, I'm going to be putting a little bit of a shape, I'd say, over the next little while. Don't forget, this is a longer term trend, 4 hours. So you might be looking for this in the next day or two, perhaps early next week. Dropping down to our 1-hour chart. Let's see if we can zoom this in a little bit. Nothing too standoutish there. Prices, you can see where our little double bottom on the 5-minute fits on the spectrum of things. It's taken all the way to an hour just to see a tiny speck of it. So, it's not a massive trade, but 20 pips, I think it's like 10 pips a day, and you can make a very great deal of money if you just aim small and miss small. So, this box is really our area. We can see we've got a little bit of resistance sort of happening there. Our 15-minute chart, we're starting to get back down to that shorter time frame. The 15-minute chart does make this look much more like a double bottom pattern, and it does inspire a little bit of confidence. The current red candle doesn't, though, because from that red candle on the 15, you would easily be able to draw this sort of a shape and make a bit of a wedge sort of happening here, in which case we're just going to be looking for a breakout opportunity to come up quite shortly. Now, 5-minute chart, let's see if that's reviewed. Now, from that, I would be looking to disregard basically that previous plan, though, until you get sort of, maybe down here you could think about it, but realistically, I'm now starting to look at this as a bounce from down here somewhere, and we're going to be looking for a breakout within this triangle wedge. At first, it did look like it, and sometimes that happens. You find something that looks kind of like it, but then it develops into something slightly different. In this case, it's gone from a bit of a double bottom looking shape, and it's moved itself into a bit of a triangle or a descending triangle sort of a pattern instead. Now, I'm hoping that's really all the time I have time for tonight, but We do run these pretty regularly at the moment and will be for quite some time. Now, if you do have any sort of questions, chances like that, you are welcome to sort of ask them now. I do hope you have all enjoyed the session so far as well. Now, to move it on, if you do want to catch any more things from me, I'm quite regularly on AusBiz TV. It's a free account to sign up. There's more than just me as analysts on the program, and you are certainly welcome to check them out as well. I'm always on the 9:40 a.m. slot, and I tend to do a couple of others throughout the week as well, but they generally be hit and miss on time frames. Now, if you have any of your other questions that might come across, or you want to check out some of my other trade ideas, you're welcome to go to the FinLogics, which is this logo here, and that's the website that just pops up there. You're welcome to go to FinLogics, have a look. I'm not the only analyst on there. I'm not the only trader on there. There are a number of other people that are posting up some ideas for where they're looking at price and where they've placed trades as well. That might give you a bit of an opportunity to have a look for. And of course, don't forget to sort of check out some of our other areas at ACY Securities, which will provide some of the blogs and other content that we offer is on that side. Now, I did promise my email address, so if you do want to reach out to me for any of the reasons, the beginning of the night, the middle of the night, really doesn't matter what the question is. If it's on the realm of you needing a little bit of help or education, or you want to get my general thoughts and opinions, then please feel free. In some instances, I might actually turn it into a video on our YouTube channel, and I'll notify you when the video is out and ready to go. So that's really all for tonight. And I do look forward to seeing you all again. Next Tuesday, I'll be doing them again, 7 p.m., same time as always, and we will be commencing at that stage. So bye for now and have a good evening.